Do you know all about the debt consolidation loans that you are taking? I heard a friend saying that he no more feared debts because of the ease with which he can repay them through a debt consolidation loan. Is it so easy to counter debts through a debt consolidation loan? Are there any issues attached to this method of debt settlement that needs appropriate consideration? The following article is a guide to debt consolidation loans in the UK and discusses important issues that linger in the mind of borrowers related to it. It is really easy to avail of debt consolidation loans. Almost every lender in the UK would willingly offer you the necessary finance to eliminate your debts. This is even when there is no collateral to back the loan amount. Gone are the days when the persons in debts were considered pariah. Debt is an accepted fact, which with the present materialistic lifestyle crops up because of increasing expenses. Thus, debtors are able to get finance easily to settle their debts. However, there is a limit to the times that one can push his finances to the edges. Accumulating a huge amount of debts every time to be cleared through a debt consolidation loan will be unwise. When the debt consolidation loan has been secured on one's home or certain movable or immovable assets, the stake is directly on the asset pledged. Incapability to repay loan installments will result into repossession of the asset. Even when the debt consolidation loan is unsecured, lender has the right to recover the amount unpaid through court proceedings. Another argument for a judicious use of debt consolidation loans is that the equity in home so consumed could have been used for other important purposes. Equity in the home makes the borrower eligible for better deals in whatever loan that he approaches for. Having consumed the whole equity will force the borrower to accept deals at par with the non-homeowners or at comparatively higher rates of interest. Doesn't that make up a good case against the misuse of debt consolidation loans? The first step in preventing the misuse of debt consolidation loans is deciding when to allow the interference of a debt management agency. This step will involve gauging one's capability in relation to the debt amount. An accurate measure of the capability must be reached to avoid future repercussions. Engaging the services of a debt management agency when the debts can be easily eliminated through one's own resources will amount to a misuse of debt consolidation opportunities. On the other hand, not involving the debt management agency knowing that the debts are beyond reach will only give debts a greener pasture to grow without bounds. Thus, the proper appraisal of one's capability must precede any decision to draw debt consolidation loans. Having accepted the intervention of the debt management agency, the next important task will be to decide the amount to be drawn as debt consolidation loan. Note, you are not to quote an amount randomly. The best measure of the appropriate amount of debt consolidation loan can be had by consolidating or clustering the various debts. Debts include debts on account of credit cards, store bills, bank overdrafts, etc. While listing the debts for settlement, debtors must ensure that no debt is left unattended, whether big or small. The amount drawn under debt consolidation may exceed the amount of debts. Cheaper finance available for debt settlement can be saved for use in other purposes. What distinguishes a debt consolidation loan from the other loans is the guidance provided by the lender in eliminating debts. This facility is purely optional and borrowers can't themselves conduct the repayment. However, the facility that is being talked of is for individuals for whom it is difficult to take time out of their busy schedules. Moreover, they would willingly engage the services of the debt management agency to avoid confrontation with the creditors. Lastly, and the most important of all, debt management agencies have better faculties to deal with these situations. They are good negotiators and can bargain the deal that can save several pounds for the borrowers. Like in any financial matter, the structure of the debt consolidation loan should be decided with prudence. By the structure of the loan is meant the terms on which the loan is taken. This includes the rate of interest, amount of monthly installment, prepayment facility, etc. Do not hesitate in questioning the terms that you find unjustifiable. Take independent advice if necessary from independent financial advisors. This would be helpful because they have a specialized knowledge of the field. The independent financial advisors provide guidance on important matters related to the loan. Many easy-to-use softwares like Debt Consolidation Loan Calculator have also come up to help borrowers in the decision-making process. These steps, though being time-consuming, will ensure that the debt consolidation loan eliminates a burden and does not turn into one. A strict adherence of these steps ensures but not guarantees against the bad effects of the debt consolidation loan. However, There is the assurance that you took sufficient steps though the debt consolidation loan turned bad because of certain unavoidable factors. Permission is hereby granted to reprint this article as long as proper credit is given, including the information handlings. About the author, Francisco Rodriguez. His debt consolidation necessary. http://www.getdebtconsolidationhelptoday.com